Welcome to Illuminati Silver. We tell the truth about silver. Today is Saturday the 5th of December 2020 and we're publishing our gold and silver weekly update for the week ending the 4th of December. We also briefly look at political events and economic reports which could shape what happens to the US dollar and therefore precious metal prices this coming week. Now, before we report on what's happened this past week, a brief shout out to three particular videos we wish to draw your attention to. One, which we produced yesterday, entitled $1,000 Gold Next, Not $5,000, Harry Dent, where economist Harry Dent explains why he believes gold will go to $1,000 long before it will reach $5,000, explaining that deflation is a gold price killer. And the second, entitled $100 Silver, which we published 2 weeks ago, where we highlight that although we can see silver at that price someday, we express the reasons why it's not likely in the immediate or foreseeable future. And at a similar time, we produced a third video entitled Bitcoin Surges as Gold and Silver Recovers, where we reported that Bitcoin had reached its all-time high, just shy of $20,000. And whilst for us it's too speculative an investment and its price variations too wild, it is something that cannot be ignored, as it is impacting the investment community and preventing funds from going into gold and silver for investment purposes. Even Anthony Scaramucci's Skybridge hedge fund is dabbling in this area and is even considering setting up some sort of cryptocurrency Bitcoin fund itself. And those who follow Skybridge will be aware it's normally a latecomer to new investment opportunities. Unlike the man himself, it tends to be less adventurous. And we've produced links to 3 of these videos in the description box below. Okay, back to the financials for last week. Gold rose $50 last week from $1,789 to $1,839, having hit a high of $1,848 and a low of $1,765, a rise of 2.8%, but not quite enough to make up for the $82 fall it experienced the week before, and also hitting at some point a lower low than the week before, which that week had also done the same compared with its prior week, in other words, hitting a lower low. This is important to at least acknowledge, though may not necessarily reflect on what's going to happen over the next week or so. In sterling terms, gold finished the week at £1,369, and that's up £24 or 1.8%, and in euros it closed at €1,517, that's up €21 or 1.4%. Silver rose $1.50 from $22.72 to $24.22, having hit a high of $24.42 and a low of $21.91, a very healthy rise of 6.6%, making up the previous week's fall with a marginally higher high, but also having a marginally lower low. In sterling terms, silver closed at £18.02. That's up 95 pence or 5.5%. And in euros, it closed at €19.98. That's up just shy of €1 or 5.2%. The gold to silver ratio fell from 78.7 to 1 to 75.9 to 1. A considerable improvement for silver, and it will be interesting to see if it does eventually managed to dip below 75 to 1. Bitcoin is up $1,944 at $18,984, which itself is $900 below its week's high. The Dow Jones closed on Friday at 30,218, up 248 points on the day and up 308 points on the week. The S&P 500 closed at 3,699, up 32 points on the day and up 61 points on the week. And the Nasdaq Composite closed at 12,464, up 87 points on the day and up 259 points on the week. The Dow has now reached another closing all-time high. So has the S&P 500 and so has the Nasdaq, breaking all records and showing where, at least for the moment, where investors are again placing their money. Of course, the rise cannot go on forever, that is a given. But there are investment experts out there continuing to predict further rises, especially as the world's economies begin to recover from the COVID-19 pandemic. Brent crude closed at $49.25, up 73 cents, following multiple week rises, and still heading for our prediction of $50. And WTI crude closed at $46.26, up $3.11, again following a multiple week high. The dollar index is down yet again, though marginally, and stands at 91.70. That's down 0.1 on the week. Now, our conclusion last week stated, quote, "So we are a little more cautious this week, expecting gold to trade between 1750 and 1850, with 1700 and 1900 being outliers, and silver trading $22 to $24, with a $20 to $25 outlier." Unquote. This is basically what did occur, though silver did threaten at one stage to move to the top of our outlier scale. But as far as our assessment system is concerned, both gold and silver operated within our expectations, which frankly was difficult to call in view of the considerable amount of important economic data being published by the US last week, and also knowing that OPEC Plus were also meeting and what effect that could have had on markets. Now, having mentioned OPEC Plus, we can broadly report that OPEC and its oil-producing allies, which includes Plus, agreed to increase production by 500,000 barrels per day, beginning in January. This will bring the total production cuts at the start of 2021 to 7.2 million barrels per day. The decision came after days of discussion and after a meeting that was originally set for Tuesday was actually pushed back to Thursday. Ahead of the meeting, the oil-producing cartel was widely expected to extend production cuts of 7.7 million barrels per day through at least March. And of course it didn't go that far, it was 7.2. The fear of a greater production increase, which did not materialise, has meant that to some degree for now prices can still strengthen in accordance to a large degree really by the movement of the dollar from here on, which is why we envisage around $50 crude prices as being quite achievable, and have even, when their prices were in the late 30s and 40s, predicted that this was likely to happen. It didn't take a genius to work it out that in spite of how low oil production costs actually are for certain producers, $50 is seen as that sweet spot for the majority. We all know, in truth and in reality, that oil should be no more than $20 a barrel to mop up global excess supply. But from our point of view, when anyone mentions manipulation or rigged markets, we personally always go to oil before precious metals, as their manipulations are most certainly so obvious to see and to some degree openly declared. Now, last week's economic data became predictable after we had the ADP report on Wednesday. Prior to that, manufacturing PMIs were either equal or weaker than the previous month, and motor vehicle sales were also poor. The ADP employment report, though, revealed 307,000 new jobs for November, compared with 404,000 in October, which actually disappointed markets and really set the trend for the non-farm payrolls on Friday, which were also disappointing, coming in at 245,000 jobs for November, compared with 610,000 in October. Whilst the ADP report does not always mirror what's going to happen with the non-farm payroll, it is generally a pretty good guide. The ISM Services Index for November was also weaker than October, and factory orders for October lower than those for September. The overall picture is still growth though, but at a declining rate. And with coronavirus infections, hospitalizations and deaths in the United States reaching all-time highs and severely problematic across the rest of the Western world, though China seems to be recovering, this does not augur well for the next few months ahead. It's only the thought of a stimulus package, which it does appear Congress may pass, potentially just shy of $1 trillion, which is keeping markets buoyant. Plus perhaps the view they're now looking some 3 months ahead, that's the markets, rather than what may occur during just December and January. Now, looking at gold from a technical point of view, there is the appearance of consolidation. Support is seen near the 10-day moving average of $1,815 and the 200-day moving average at $1,803. Resistance is primarily at that psychologically important level, which also emulates the November highs of around $1,900. Short-term momentum has turned positive, and medium-term momentum is also on the brink of doing so. And the MACD, though, is suggesting a buy signal. The issue now is for many to ascertain whether gold is still in an uptrend and about to find its final leg, as it were, which you hear many say normally represents the largest rise. And we hear terms like blow off top. Well, we shall hold judgment on that right now, as we're not quite convinced the signs are there quite yet. But we could be wrong. Looking at silver, it gained considerable momentum from Tuesday onwards, having dipped to its week's low within 5 hours of opening on Monday. As we stated last week, we still have the potential for a fallback in price to below $22, and if that held, then down to $20. But there are suggestions by some that we may even see prices heading towards $26 this week. From a technical point of view, this is not likely, as silver hit considerable resistance on Friday, with what those in the trade call a gravestone doji being formed, which suggests lower prices. So much still depends on the dollar value, because as the pandemic increases, this is not going to serve silver well in terms of industrial demand, and so it has to rely on those investing in it for monetary purposes or hoping for further US dollar decline. Being priced in dollars, its value will go up. Either way, we shall undoubtedly see some oscillation in price. So looking ahead to next week, following the US economic data to be announced, we have on Monday, consumer credit for October, Tuesday, productivity for quarter 3 revised, and unit labour costs for quarter 3 revised. Wednesday, job openings for October and wholesale inventories for October. On Thursday, we have the traditional weekly jobless claims, but also the consumer price index, core CPI and the federal budget, all for November. And on Friday, we have the producer price index, the final for November, and the consumer sentiment index for December. So Thursday and Friday are the key dates for reference and observation, and are most likely, the Thursday in particular in our view, to affect markets, if figures, that is, are wide from expectations. So what can we really expect for next week in terms of performance? Unfortunately, again, we suspect more of the same, with perhaps the focus moving to the upper end of the median rather than the lower end, even though technically silver prices should theoretically fall. With a stimulus package about to be announced, and having listened to Senator Romney yesterday, it does look as if something will be announced this coming week, whether it be a $900 billion package at the top end or a $500 billion package at the lower end. Whichever is ultimately decided, it means more money printing is the order of the day. Our concern for gold and silver, though, short term and potentially medium term, is the movement of funds into Bitcoin and cryptocurrencies, and how we have noticed, and this is why we seem to be focused on this at the moment, because we're getting a lot of feedback from the investment community. You see, on average, just Bitcoin alone, some $160 billion worth of Bitcoin exists. Now, if you imagine that $160 billion instead of going into Bitcoin, went into, say, silver at an average price of $24 an ounce, that would enable you to purchase, and you're going to love these numbers, 6,666,666,666 ounces. Couldn't make that up, could you? So don't read too much into the numerology, please. And in gold, it would give you the equivalent of 86,956,521 ounces. Just imagine the impact of either, or on either rather, if those funds were directed to gold or silver or a culmination of the two. So, this week we're expecting gold to trade between 1800 and 1900, with 17 and 1950 being outliers, and silver trading 23 to 25, with a 22 to 26 outlier. So we're keeping similar differentials as before, but perhaps are expecting, if not a strong performance this week, but quite possibly a steady performance, particularly if the stimulus package is towards the upper scale, though we may find market disappointment if it's to the lower end of that scale. Now, of course, geopolitical issues can still play a part, and with it now looking as if Biden is the president-elect, with the Attorney General Barr announcing that there is no evidence of widespread fraud, and actually speaking on behalf not just of the Justice Department, but Homeland Security and the FBI, it will prove most interesting to see what President Trump does as his path towards victory becomes increasingly narrow. Meanwhile, thank you so much for listening. If you haven't already done so, please subscribe to our channel, not forgetting to press the bell sign so you're notified of our videos as and when they're published. By all means, express your comments below. And also, we've produced another video on the Richard and Greg channel, a link to which is shown below. Finally, and as always, we wish you a safe, enjoyable weekend and a most prosperous week ahead. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer. Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.